Dear friends, welcome to PMS Insights. The Nifty continued to touch new highs despite some correction in small and mid caps. The increase in volatility amongst the broader markets was on the back of weak global cues and inflation worries. Nifty index continued its outperformance versus global markets led by healthy earnings, shift of FI flows into India led by China tech crackdown and strong domestic money flows. In the month of July, Indian MF saw highest inflows with monthly inflow of 22,000 crores. Corporate earnings in the first quarter of FY22 have been in line with expectations. After a strong last quarter, earnings in FY22 began on a healthy note. The damage from the second COVID wave and consequent lockdowns in April-May 21 is much lesser versus the national lockdown in last year. Management commentaries across the board suggest an improved demand environment post June 21, led by an easing of restrictions, fewer COVID 19 cases, and a pickup in vaccination. However, the impact of rising commodity prices and, in general, higher inflation was felt on the P&L. Asset quality in financials has expectedly weakened sequentially. We expect the recovery in corporate earnings to continue as the economy opens up with progressively higher vaccination. Cyclicals and commodities saw the highest upgrades last quarter, while autos and NBFCs have seen earnings downgrade. While we continue to expect strong growth in FY22 and FY23, we believe that a lot of it is priced in at the current market levels. In this backdrop, we are focusing on stocks and sectors which could be potential beneficiaries of the big structural changes that are underway globally and in India. We have always believed in a unique blend of art, science, and trend spotting in our investment decision making, which has stood in good stead over the years. In our recently launched trend spotting report, we have highlighted the five big trends that can play out over the next decade and its potential beneficiary sectors. We would recommend you to read the extensive report, which should be in your inbox. The study analyzes the big trends that have played out over the last couple of decades and have identified the key enablers of any big structural trend. It brings to fore some of the key market insights and dynamics at play, which we believe will help in making better investment decisions. The trends highlighted include rise of domestic manufacturing, digitalization, cyclical revival in real estate, sustainability, and small and mid-cap outperformance. The trends that we have highlighted are long-term structural trends wherein we expect these catalysts to play out over the next 3 to 5 years. Given that the factors leading to these trends are structural in nature, like changing demographics or permanent change in consumer preferences, we believe these are multi year stories which have strong fundamental underpinnings. Coming to our portfolio positioning, all portfolios have healthy exposure to the beneficiaries of the trends highlighted earlier. Also, we are proactively booking profits where we believe prices have moved ahead of fundamentals and incrementally increasing exposure to stocks which have favorable risk reward at current market levels. Thank you.